So I think it looks very good technically, silver. And I think we're going to start seeing some big moves higher, but also some sharp corrections down. So you need to be like ready for those. You might see $2, $3, $4, $5 moves higher, but you might see a corrections of $1 downward too. But yeah, I think silver is ready to test that 50 level, and it will be the third time basically in 45 years. So, and I think we're going to break through there, and it's going to be very explosive once we do.
Silver is once again approaching its historic $50 barrier, a price level that has only been tested twice in nearly half a century, generating significant excitement in precious metals markets. Market commentator Mario Innecco, well regarded for his insights on precious metals, observes that silver has already broken through the key 61.8% Fibonacci retracement level, leaving minimal technical resistance until it reaches the major psychological milestone of $50. While there is a minor retracement level just below $42, Innecco considers it relatively insignificant, making the $50 mark the true test of silver's current bull run. The recent strength in silver may be partially attributed to short covering activities rather than entirely fresh buying interest, yet Innecco sees virtually no compelling bear case for either gold or silver in the current market environment. His analysis is grounded in the structural reality that mounting government debt levels leave policymakers with limited options beyond creating additional liquidity and maintaining suppressed interest rates, as any genuine attempt at deleveraging would pose serious threats to the stability of the entire financial system. The broader economic landscape is shifting dramatically, with globalization in retreat and supply chains becoming increasingly fragile and unreliable. This transformation is expected to drive countries like the United States and Canada to adopt more protective stances regarding their domestic resources, prioritizing national resource security over global trade optimization. These trends create a supportive backdrop for commodity prices, particularly precious metals, which serve as stores of value during periods of economic uncertainty. Before diving deeper into insights on gold, silver, and the broader financial system, make sure to like this video, subscribe to the channel, and tap the bell icon so you never miss the latest updates.
But yeah, I think there's a problem there, and we might see open interest not really go up that much because the move higher might have been a lot of short covering. So that keeps the open interest neutral. No, I don't. I don't, because I don't see, aside from the fiscal and financial situation, there's also the geopolitical situation, which isn't great, especially as it relates to Ukraine and Russia and the EU. EU seems to be determined not to really push for peace. So that's another one. And and as for the fiscal situation, they can't really do anything but try to keep pushing for more liquidity, lower rates, because, the debt is gargantuan now. And in this system, if we allow the debt to give any hint that it's going to liquidate, it's really bad for the system. So the bigger the debt gets, the more serious it gets. So I don't expect them to get religion, and by that I mean become like sound money advocates of peace, small government. I don't see that happening. So yeah, I'll hold on to my gold and silver until until I don't know when, but sure. I think so. And I was looking this morning at the high in 2011 and the low in 2019, the Fibonacci retracement, and we've gone through the 61.8% retracement. There's a 76.2 retracement, which is just below 40 42, but that's not a very important level. So there's not much resistance here until 50, which is a really key level. So I think it looks very good technically, silver. And I think we're going to start seeing some big moves higher, but also some sharp corrections down. So you need to be like ready for those. You might see $2, $3, $4, $5 moves higher, but you might see a corrections of the dollar downward too. But yeah, I think silver is ready to test that 50 level. And it will be the third time basically in 45 years. So, and I think we're going to break through there, and it's going to be very explosive once we do. Yeah, I mean, that is important. I'm surprised that it wasn't on that list before, because it's really important for the military, silver. So yeah, for the miners, I guess that's really important too. And I think President Trump signed an executive order just around the time he took power for the second time about natural resources. So I think the Americans are going to continue to push for this development and exploration of natural resources. And I think the world is becoming less and less, of course, globalized, and the supply chains are becoming more and more precarious. So yeah, the US, Canada, maybe not Europe, because we're still in this net zero philosophy, but a lot of places are going to start like defending their natural resources. And like the dollar, for example, is not going to be accepted as much as it was prior to now. You know, the US didn't care about natural resources because it could just use the dollar to buy properties and natural resources anywhere around the world. But now that's becoming a little less so, because people are moving away from the dollar, and they're trying to protect their resources because they want something of value in return for their resources. Maybe if the US starts paying in gold, they might open up a little more. Yeah, I mean, the miners, they lagged quite a bit until recently, till this year, I think, and they're doing really well, and they still have a lot of potential. Excuse me, especially the junior miners. But the junior miners are different because they're riskier. So I think people should have a mix of both. You know, the Newmonts and of the world, and the other ones, the juniors, but also silver. The silver miners, I think they have even more potential than the gold miners. And in terms of the balance between physical gold and silver and the miners, I'm always personally, I'm more conservative. I do have miners, but the bulk of what I have is in gold and silver. But yeah, I think the other thing about the miners, don't leverage, because it's going to be leveraged enough just by because it's dangerous leveraging, even in a bull market.
Mario Innecco highlights gold's remarkable return to prominence in the global monetary system, noting that despite the abandonment of the true gold standard after World War I, the precious metal is reclaiming its foundational role in international finance. A pivotal shift has occurred in central bank reserve compositions, with foreign central banks' gold holdings now surpassing their dollar reserves for the first time since the mid-1990s. This trend is accelerating as BRICS nations and countries like Poland continue their aggressive gold accumulation strategies. Innecco explains that gold's recent consolidation was necessary following its rapid ascent from $2,600 to $3,500 within months. The sideways movement since April formed a symmetrical triangle pattern, which typically signals a continuation of the previous uptrend. This technical formation held and ultimately broke higher, confirming the underlying bullish momentum. Regarding monetary alternatives, Innecco argues that a unified BRICS currency would face the same practical challenges as the euro, given the cultural and geographical diversity across member nations. Instead, gold provides a universally recognized, neutral store of value that all participating countries can trust without requiring complex monetary integration. This allows nations to maintain sovereignty while benefiting from a reliable medium for international settlements and reserve holdings. Let's return to the interview.
Yeah, I mean, we haven't really technically been on a gold standard since like around World War One, and even Bretton Woods was a gold exchange system. But the reason I mentioned that is that recently we've seen that gold reserves by foreign central banks have overtaken the dollar for the first time since I think 1996, and the trend looks set to continue. And the other thing as well is that all the major BRICS countries and a lot of other countries, Poland, for example, as well, they're loading up on gold as reserves for their central banks. I think the world is realizing they can't not just depend on the dollar as a major reserve asset, but also they can't really take the risk of having too many dollars as reserves, as it's been used more and more as a weapon. So the only thing left after that is gold. Gold is the only neutral monetary reserve asset that's been around for thousands of years. And the reason the dollar was ever a major, or still is kind of a major reserve currency, is because it used to be as good as gold. So that's why I mentioned that. And I think we're going to go back to a standard, a gold standard anyway, because what we have now is dying. I don't buy into stable coins because all they're going to back that with is more and more fiat currency debt, which I think if fiat currencies go, that's going to go too. Well, on a technical basis, I think that consolidation since April was necessary because gold was overbought. It rallied like from 2,600 to 3,500 in like 4 months in the beginning of the year. So it's normal that it consolidates. And we also saw like a few weeks ago it tried to break out of this symmetrical triangle, which is on an upward trend. It's usually a consolidation of the previous trend, but in technical analysis, only like 3 out of 4 times it keeps going the same direction of the trend, which was up. There is a chance that it might fail. So it didn't fail. What do I think triggered it in terms of fundamentals or outside events, outside technical analysis? I think it could have been the speech by Chairman Jay Powell at the Jackson Hole Symposium a week or two ago, where he said that the Fed's ready to cut in September. And then you mentioned before we came on about Fed board member Waller. He said that depending on where non-farm payroll comes out at this Friday, we could see a jumbo cut. So he's implying that if we see a very weak non-farm payroll, like we did last month, and also weak revisions, they could cut more than 25 basis points, because right now Wall Street, they're discounting an 87% chance of a 25 basis point cut on the 17th of September. But what is a jumbo cut? Could it be 1%? Or, I mean, they did a kind of a jumbo cut last September by 50 basis points, which surprised everyone. So I think that's why gold is started to take off geopolitically as well. I don't know if you want to go into that right now. It looks like President Trump has been able to unify BRICS even more, even though he's been very critical of BRICS. He's got 2 old arch rivals or enemies, China and India, to make peace again. and start talking. So that's only going to solidify the BRICS movement and the move away from the dollar. And you move away from the dollar, there's only one place to go, gold. Yeah, I don't see anything like that coming out soon. But what I think they're working on is having a payment system for all the major BRICS and global South currencies, so they can pay each other without having to go through SWIFT. But what's going to happen, I think, is they're going to use gold as a settlement asset at the end of a fiscal year, or whenever, let's say, a country has a surplus with another country and they're holding on to loads of yuan, for example. They might say to the Chinese, give me some of the gold, I'll give you the yuan. I think that's what's going to happen. I don't see them going for a single currency. That's just that puts countries in the straitjacket. Look at the euro, which is a currency, a single currency for a continent that's fairly culturally similar. Even that has been really hard. Can you imagine having a single currency for all those BRIC nations in different continents? I can't, but I can imagine them using the same reserve asset, i.e. gold, because everyone recognizes gold as money, especially in those countries. It's only in the West that we've been brainwashed into thinking that gold is just a barbarous relic or a pet rock.
Across these insights, a consistent theme emerges: gold and silver are increasingly central to both investment strategy and global monetary dynamics. Technically, both metals have cleared key levels, supported by consolidation patterns and potential policy shifts from central banks, while mining stocks, especially silver miners, offer leveraged upside without requiring external debt. Fundamentally, growing fiscal strain, geopolitical tensions, and the weakening dollar are driving nations to diversify reserves into gold, with BRICS countries even exploring alternative payment systems settled in gold rather than relying on SWIFT. Silver's industrial and military importance further strengthens its case, while cautious allocation between physical metals and miners remains prudent. Overall, these trends underscore a return to tangible, historically trusted assets, highlighting the enduring role of precious metals in a world where fiat currencies and globalized systems face mounting stress. Could gold and silver become the primary global reserve assets if reliance on the dollar continues to decline? Stay tuned. If you're interested in real, data-backed insights on the financial system, hit like and subscribe so you never miss weekly updates. And if you follow Bitcoin-related news, consider subscribing to our other channel for more updates. Thank you for your support, and we hope you enjoy the video.